As a reminder, none of what I say is financial advice. Strictly for entertainment purposes only. Please hit the like button, hit the subscribe button. I appreciate all of that. I repopulated this. The Linktree is in my profile bio on Twitter. There are a bunch of new bonuses that have been added. You have your pick of the litter. I'm not going to tell you where to trade. You only have so many options depending on where you are. But this is a good assortment of exchanges between PEMEX with some bonuses. I think PEMEX is still non-KYC. Woo is awesome. So I do a good amount of trading on Woo. Bybit, obviously, a very popular exchange and very significant exchange in this space. So Synquote is the #1 options DEX, and we're going to be listing perps hopefully within this week. And then we have a lot more that we're going to be listing that I can't really get into. But if you see that you have points, I think you could begin to extrapolate from there what is going to be coming. And then there is some curiosity whenever I post anything like this platform. I'm posting that platform, post the level 2, which is the bids and asks for stocks. A lot of you guys have asked where I trade. This is an organic shill. I've actually traded on Centerpoint as far as my stock brokerage and the Dash Trader platform that they have. I've been on Centerpoint, which is part of Clear Street, for a long time now. And they saw that I was sharing the platform, and it's not like I was affiliated with them by any means. And they reached out to me and they said, hey, can we do something for your followers? I don't get any commissions for this. So if you guys take advantage of this, good for you. None of it goes to my pocket. They end up just giving me a kickback that takes off from my trading fees and my commissions. But I've had a lot of people ask me. I know there's a good amount of crossover now trading the ETF. There's plenty of people that trade crypto related stocks, miners, a lot of the AI things taking place in legacy markets. And so for those of you that are interested, take advantage of things like this. Okay, so I guess we'll just get right into it. I've been around here for a few cycles. I've been trading now for over a decade. I had traded equities for a long time, traded futures, traded crude oil, traded commodities, came to crypto and started trading crypto full time 2016. I've seen enough here to where I think I have a good amount of experience where we're headed, which is in price discovery. But talking about through all-time highs. Once you're through all-time highs, it's like you don't have the luxury of looking at prior levels in areas of importance based on volume, based on structure, and you're just kind of sailing in open sea. For people that are just holding and not trading actively and not trying to time every market turn and gyration, this is a time when it could be slightly difficult because there is nothing to look forward to. It's not like as clear as it became when, for example, we started trading back within this prior range. The level I kept saying was like 31 or 30,500. So we're trading back within this range. The levels that we have to look forward to, while it might take time for the market to move there, it's a high probability that based on all of the setups we're seeing across the market that we're going to move from point A to point B. So you have an idea of, okay, where can I define risk? Where can I begin to take some off? And you're just clearly defining things based on market structure and based on these contextual shifts. And I mean contextual shift because, hey, this level did its job in the past for this bounce going back to 2021, did its job on the way back down, did its job on the reversal and attempt to reclaim, did its job earlier in 2023. So the level is clearly working, right? Retaking that level, that's very significant. And we have levels in advance to look forward to. Significant round numbers. There's a significant amount of volume transacted, whether you're looking at a profile, whether you're looking at market structure on a high time frame chart, whether you're just looking at a large range and saying, okay, the midpoint is likely to be sticky. Point is you have something to look forward to. Whereas now heading through all-time highs, you can't rely on that. A lot of the times people will look at significant round numbers, areas that people are agreeing upon, longer term moving averages. I think that VWAPs are very useful. So VWAPs on the weekly, on the monthly, anchored VWAPs especially. So we broke the all-time high yesterday, pretty anticlimactic. Prior break of all-time high before it might not be noticeable on a high time frame chart, and it is, but it was for the most part up only. But prior all-time high break right before that, we spent actually a month hanging out below it with like a 13 or 15% correction and overall positive drift. So if we just zoom into that area, there was a general trend of price moving higher. So even though we're hanging out below the all-time high, we're kind of consolidating against it. As soon as you saw this low, you have a low to focus on for finding either a further position or an invalidation. And it was clear by this second turn that we're forming a higher low, favoring this level. The drift of death is what you would call it if you're shorting. If it's not doing its job right away with sellers showing up and continuing to kick this thing lower, then it's clear that you're just setting up for a much larger move through the level. So we're sitting kind of in a similar position, but we actually broke the all-time high without any kind of longer term correction. I just mean consolidation below it. So we broke it, we're above it, whether you're looking at it from a weekly close standpoint, but you got 4 days left. We wicked above it. Now we're just hanging out there. Listen, is this thing going to break up during the Asian session and then rip up plus 70? I don't know, maybe. Can it spend the next 4 weeks above 55K, 60K? Honestly, I think that if there's one thing that I'm really confident about, it's that it's not going to be a case of us having some kind of triple top. I would say it's a foregone conclusion for the most part. Obviously, market's dealing with a ton of uncertainty that this is going to continue to move higher and that this is not the top. It makes sense that things get really hot towards this level. You're going to see activity occur that you would expect. Market's been up only now for over a year. This is the most significant level on the chart. It's reasonable, actually, for people to de-risk. It's reasonable for them to hedge. This is a guy named Citrini. He's a FinTwit guy. He also trades crypto. So this guy right here was talking about the S&P was at the time, it was approaching all-time highs. Like, listen, it's the same concept with BTC. It's completely reasonable to be defensive below and just be balls to the wall, risk on, bolt hard above. This is such an obvious level. It's a really clear level to define to the point where you could say reasonably, as long as we're below it, I'm just going to kind of pull off. And we're right there. We're knocking on it. We're at the threshold of the door. If we're above it, I'm just going to get back in. If we are able to hold that level and the market is able to confirm above that for a day or two, I think it's off to the races. We're just going to continue to have corrections like that. It is what it is. Expect them to get violent, but I think that's reasonable. So for anyone who's at this level and taking profit from a high time frame standpoint, it would be the area where you would expect profit taking for people that are not willing to just wing it after all this time, because anything Bitcoin does is going to exacerbate anything that's occurring in the alt market. Potential is also for Bitcoin to break through the all-time high and then hurt any alts that haven't been outperforming to begin with. So you'll see a bunch of alts that are going to be performing negatively against BTC. The really strong ones will probably outperform it, higher beta, and consistently maintain that relationship. But then also, if like, let's say we do pull back further to 60, although we did get that 60 swipe yesterday, alts will probably respond to that negatively, but then you'll see really strong moves in that. For anyone who's taking a little bit off up here, I get it. I personally am staying in position, haven't changed anything, been trading a lot around it. But like I said earlier, I tried to indicate my level of confidence in it breaking eventually. So it's either heads we win, tails we win also, in the sense that break the all-time high time frame close above, if we're just going to draw it out in simple terms possible. Major rejection here. This wasn't actually catastrophic by any means. I was actually surprised that when we broke this level, and you could even look at it just across major exchanges, just going down to just low time frame charts, because when I was monitoring the break, I was looking at it on like a 15-second chart. Nothing, no blowouts or anything. This was basically like the market was going up here somewhat on fumes. There's a good amount of derivative positioning, and it just wasn't forced. It's almost like I would expect that the fireworks are being saved and they're allowing a little bit of indecision to build up, allow a little bit more positioning to build up before just absolutely sending this thing through the level. But this is not what you expect from something that is absolutely topping out either. You would expect spreads to blow out. This thing should have, and when it does, when you actually do get the break of an all-time high that is the confirming break leading to expansion, price is going to tag 71, blink down to 65, maybe not this extreme, but the book is going to clear out. The moves are going to be all over the place. You're going to see it settle briefly, and then honestly, I just want to see us literally hold this level, just remain bid. If you're looking at something like an order book, if you're looking at Delta, and when we break this level, you want to see things firm up on the bid side and any selling just get immediately absorbed and this thing continue to walk higher. And then I think it's on. That's heads we win. Tails we win also is literally if Bitcoin just does something like this, trades within this range, and then has this consolidation that people will second guess it. But the longer it does this, at that point, I would expect a more violent move. Anytime you're in an area where there's two-way trade and you have it moving sideways for a long period of time, as long as you're seeing any kind of level of open interest increase or stay the same, there's positioning building up and someone's going to be wrong. And in this case, because I think we're so confident of this moving higher, anyone who gets involved here and sells passively or whether they're hedging, they're going to be wrong pretty quickly and probably going to chase this thing further up. Worst case scenario would be retesting like 50, retesting that 50 region, having that deep of a pullback after an all-time high tap. So I'm hoping that we consolidate in the better part of this region. I would probably get defensive if we start losing 60. This is my sort of line in the sand because I don't want to give back really anything. Just remember, I'm not really missing out if I'm wrong. If we consolidate here, I'm cool because I think alts fly. And I think we're still going to end up above here. If we end up breaking below 60 and we're having trouble here, or even if we're just hanging out low and there's no sign of bid, I could pull some off and begin to hedge because I'm not upset about getting involved when things get better because it's so close. Because high probability setup exists so close that I don't feel like I'm missing out. Let's say I lose some in that positioning change down here or by hedging on a break of this level and waiting for things to cool off. If we end up moving lower and then we have some development, some forms of higher higher lows and constructive price action, then yeah, I would redeploy. I think there's really good levels to define a position around. I don't want to give much back. We shouldn't drop much lower. There should be a continued pace to this. Any large corrections after this, I would be a little bit suspicious going into the halving. I think I'm most focused on 60. So as far as alts, people are already starting to talk about rotation. I would assume that any trend that's intact is going to remain intact unless it's clearly changing. Things like WIF, spot market on Binance gave an awesome opportunity. So people never understand this. I say the market's going to put in a temporary top here on the Binance listings. Binance is 100% hit rate in being a temporary top for alts listed in the spot market that are really hot. So obviously right now is the best opportunity. WIF has already done away with that drop, but PEPE during months back top. There's so many diamond-handed people that are holding these for so long and they're so bullish. They're up multiples. The Binance spot market is the opportunity for the deepest amount of liquidity to be accessed by a majority of them. So it makes sense for people to take profit into that. Now in a raging bull market, it makes sense for that to be temporary. But as far as like what I'm looking at, I got a lot of shit for saying a month ago, I said crypto needed a new narrative, a larger narrative, because there's just a lot of bullshit here. We have a ton of awesome ways to speculate, but as far as being taken seriously, it needs a new narrative. So clearly meme coins don't fall under that category. Everything has become a casino in a sense. I talked about buying WIF down sub 30 cents. So I was long WIF after saying that, but I do think that a lot of people are immediately starting to call for the rotation when it's not clear yet that WIF has done anything, that PEPE has done anything to say that it's over. If anything, you would expect that the things that are the strongest are going to continue. So unless that changes, right? Unless we start trading back below significant levels, and it looks like, WIF is just starting to break up again, and PEPE the same. Breaking all-time high by BTC, I just expect these to continue to be strong. PEPE very strong. Are they going to have large pullbacks? Yeah, but I don't want to rotate completely away from these from an attention standpoint, at least. I'm trying to time these trade-wise, but from an attention standpoint, I don't want to forget about these because I think the pullbacks we have are going to be worth deploying in here still until it becomes clear that there's just weakness. And weakness meaning like when you have a case like Bitcoin dipping, are they becoming slower and slower out of the gate? For example, when Bitcoin dipped this morning, needless to say, who was the fastest one off of the lows? It was actually WIF off of the lows and it was Myro. When that changes, then there's reason for concern. When PEPE stops responding off of dips and you're having BTC outperform it, when it starts losing key levels in market structure, that's when you would expect maybe things to cool off. AI. So we have Fetch that's obviously broken through all-time highs and doubled since then. So I've been sharing Fetch and Render for a long time now. So these have been awesome plays for me. Render has just broken all-time highs. Render's been following Fetch. It's clearly following, so it's not as strong, but that relationship is pretty tight and tight enough that it's outperforming everything else. And it's an area now you could very cleanly define. So above this 7 to 8 region, you're good. And you have this 2 weeks out from an AI conference when the market is looking for any reason to bid and to get excited. So this narrative is going to be sticky because we're seeing how the world is changing in real time from AI and all the developments that are being made seemingly at an accelerating pace. Tau, I'm still unable to get much of a bag of this. It's very thin. DMEX just listed it. I have the links in my description. They actually just listed Tau. The trouble is, not going to sugarcoat this, on every exchange, it's really thin, like crazy thin. If you're trying to put on any size, you're going to have to do it over a couple days. We're talking 2% depth is like $10,000 to $50,000, which for most people I understand wouldn't even matter. But the point is, it's thin. So it's a very popular coin. It's a large project, but there's not a whole lot of trading volume in the spot market. So I don't know if the price necessarily reflects its fair value yet, as silly as that sounds. But I will say that one thing they have going for them is that they are smart enough to acknowledge that they have the same supply as Bitcoin. So if you look at this, what does retail favor? They favor things with low units. This is scary because it's $724 a coin. But if you've been here long enough and you know that that doesn't mean a whole lot when your supply is 21 million, even if it's not necessarily something that leads to the same outcome, it's possible to get creative and think, okay, so maybe this thing can get close to Bitcoin. Or at least pulling a double wouldn't be that significant because there's barely any supply. So that is something that is worth keeping an eye on. Ocean, another AI play that has tended to follow in the footsteps of Render and FET. I'm mentioning these because the AI conference is 2 weeks away. So we're looking at the 1 week chart of Ocean. And this has been my setup, guys, for this entire last few months. This chart setup, not going below really. Once in a while to monitor, I'll go below like the 30-minute, but I'm looking at for the most part 1 week, daily, 4 hour, 1 hour, interchanging those, staying somewhat zoomed out. It's easy to shake yourself out if you're not zoomed out in trends like this. But to be honest, I think setups like this, compelling narrative, a lot of strength, likely to continue. It's reasonable to just look at prior all-time highs as a target. I'm going to keep this on until we get back to all-time highs before I start to peel some off and rotate. But I just think that's where it's headed. It's been following everything else, and those are going to go higher. And I'm confident in alts going higher, strong alts going higher, because we do have, again, a lot of capital is created, a lot of wealth is created, and it's not going to just leave the market. Celestia. I think Celestia is going to continue to be an outperformer. This did better than everyone else early and now is further into its correction and hasn't really shown a ton of responsiveness. I think this is going to be a good longer term play. It might be some supply coming into the market. No, it's actually pretty far away. 17% of supply in October. I mean, we have a good amount of runway before then, but I don't expect this to underperform. I think it outperformed for a long time. You expect some larger correction after this kind of outperformance from the lows. This thing just up only, and it was a liquid up only too. But the market has been preoccupied with meme coins. This is like when I said about how it is kind of a picker's market. You wouldn't know that because of all the people sharing meme coins and AI. Every other sector is not player versus everyone right now. It's still PvP to some degree, but with just more money. And ETF has definitely helped a lot. There are pockets of outperformance. There's a lot of dispersion. Things that were strong are now suffering because other things are strong. And it's not a case of a purely rising tide. Like I said, rising tides are like retail phenomena. Like that's when we have an all-time high break and you get that new retail we hope we get, where everything is lifted. I log on to Coinbase for the first time. Celestia is a really bullish project and it's $15. I'm buying it. But it is suffering right now because everyone else has attention. I ended up getting long token because DWF, the sketchy market making crew, they're known to leave charts much higher before much lower. And they recently shared that they picked up 10 million worth of Floki. That was a week before the big markup. And they've done the same just today with token. So I think that's had a reflexive impact on the price of these assets because of how people respond to knowing what they do. So I took a position in token. So I think Celestia is in similar bucket as Sue and Say. These were really strong for a long time, but now are just suffering because the market has attention elsewhere. But Sue, for example, had a 40% pullback off of the high and now is in an area where I think it's reasonable to bid. You can see the level on my chart. I think it's a pretty clearly defined level. Lost the 20 period on the daily, haven't touched it on the weekly, but I think the trend is really strong for a long time. You expect some consolidation, but if you're going to get involved anywhere, I think it's back at the opening high. Right, this $1.25, $1 range is a good area to bid. I mean, we're above that now, but if you look at the weekly right now, I think it's reasonable to say anyone who buys this pullback, I think will be rewarded over the coming months. Say is kind of in similar place, really strong. The market is just not as interested in these right now, but I think they will sort of get their second leg. I would say that the benefit of this is a high, low, high, higher low possibly forming above this low, and you could define this position around this 60 level. As long as that level holds, start getting long here. If we put on from listing, so August 23, throw a view up on that. Even if you did a decade long, just to include entirety of this chart, so decade long, you'd see right now we're just retesting the 1 standard deviation band. So we got really stretched out and this is a healthy pullback. So I think it's going to be, again, similar to Sue, a good buy. Jupiter, for example, things like this are actually easy to play, but waiting for that signal. And the first signal was, for me, was this break. So it's a pattern of descent, making lower lows and lower highs. It's beginning to base out. And then a lot of times I'll just use a diagonal for this. And then just going by prior market structure, it's really easy to play breakouts and also to avoid it. If you're not retaking levels over, moved sideways for a month, if you're not retaking levels, like why get long until you do? If it's clean enough, why not just be willing to buy higher with that certainty? Sin is finally looking good. I think a lot of pairs came around during the bear and they got a beating. Everything did. I think this has gone through its washout period. The one thing about Synapse, and I share it and I get this in the responses sometimes too, there seems to be this idea that this is owned by a lot of popular traders in the market and therefore it gets traded. So the idea of strong hands was doubted. There's a few people that are really bullish on it, always have been, and it never was really given a chance to breathe. The one thing that I've said numerous times, some of the simplest trades in this market have literally just been this: break above after a long period below, and accumulation or correction or consolidation, a reclaim of the opening prices. So in this case, open, highest close, reclaiming that highest close. It's a way of, as I've said before, saying to everyone who sold ever that they sold too early. Thank you for being patient and tuning in for the very infrequent times that I actually do hop on here. If you guys are interested in anything that I use or anything that I went over, feel free to DM me. Yeah, and that's it. Have a fantastic evening.